What's up, everyone? Welcome to another episode of the PVP Podcast. I'm your host, Giancarlo Carangelo, alongside with my co-host, Anthony Loggia.
Welcome back.
All right, guys. So today we're actually going to do a little bit of an exchange and talk about the benefits of investing in international real estate.
Yeah, that's why Giancarlo today decided to wear the pink shirt.
Exactly. Because I'm really picturing myself in a Caribbean country right now on the beach. So
Let's make it happen.
yeah. So, let's get into it because we know some of you might be wondering about investing internationally and what the intricacies of that are. And a lot of people that I've spoken to in the past couple of years, when we spoke about international investing, they were actually surprised at how feasible it is in a sense of, purchasing and financing.
Yeah, and I think the first question a lot of people think about is, why would I possibly invest 1,000 miles away, 1,000 kilometers away when I can invest here at home? Now, Giancarlo, you're kind of the best person to talk about this, so because you deal with international real estate as well. Now, what's like a great 2 or 3 things that investing internationally is so much better than investing domestically, at least here in Canada?
Well, guys, investing is a strategy, right? And it's about running a business and it's about earning profit. And sometimes when you invest in high metropolitan cities, like if we're talking about North America and you invest in Montreal, Toronto, Vancouver, New York City, Florida, let's say, purchase prices could be high and it can be hard to see a solid return on your investment for the first 5 years or so. Recently, within the last 5 years, Caribbean countries have been booming when it comes to international investing, right? Booming. Purchase prices are lower. Returns are higher because the purchase prices are lower. It's feasible. It's easy to operate. And there's just so many benefits. Like, for example, purchasing a property in Dominican Republic. You could purchase a 3-bedroom, 2-bathroom condo in the Dominican Republic for less than $300,000 US. That same property will rent on Airbnb for $250 a night, right? So that's a huge return.
Yeah.
And there's so many pros that come with that.
Now that we spoke about maybe the pros, what are some of the biggest misconceptions people have about investing internationally?
I think that a lot of people think that investing internationally is impossible. And they think that, for example, if you're a foreign investor from Canada looking to purchase a property in the Dominican Republic, that it's hard to get financing, it's hard to purchase the property, so on and so forth. And it's actually a lot more feasible than people think. A question that I get a lot is financing. How do I finance a property, from Canada in the Dominican Republic? Well, you finance it, right? People don't know this, but Scotiabank, which is a popular bank in Canada, actually have, offices in Dominican Republic and Mexico. So you could actually finance your property in the Dominican or Mexico the same way you would purchase a property in your backyard and finance it through the same bank.
Yeah, and just like purchasing a property here or a new build here, because often that's what you're purchasing in these countries.
Yeah.
You're going to still have to put the 5% in it down. The 5% when the foundation is built, the 5% after when, the doors or the roof is put on. So those same rules apply. So the notion that it's so much more difficult to get financing in, we'll say, the Dominican Republic or Mexico or whatnot, it's just not the case, right?
Exactly. And I mean, people, for example, when you're purchasing in the Dominican Republic, they require a 40% down payment. And people think, wow, that's astronomical, 40%, right? But if you're purchasing a $200,000 condo in the Dominican Republic,
You're purchasing a 2-bedroom for $180,000.
yeah, 40% down payment on $200,000 is $80,000.
Yeah.
Right?
It's insane how, in a sense, you not only get a property that kind of earns you money every month, but you're also getting a vacation.
Right,
let's not forget that advantage, right?
Yeah, it's huge. I was just about to mention that after. Let's say, for example, your property rents out on Airbnb 80% of the year.
Yeah.
Okay. You have the advantage of flying down there and reserving your property for yourself. So you call your property manager. You say, hey, I'm going to be down December 10th to January 3rd, right? Don't book my property. Then you stay in your own property. So not only does the property pay yourself, but you don't have to pay to stay somewhere when you fly to these countries.
And it was actually my question I was going to ask you, like, how do people manage their properties internationally? Because that's also something that's completely different from here.
Yeah. So, developers in these countries, guys, they really design their vision with a turnkey philosophy. So oftentimes a developer, if they're a commercial developer, essentially, oftentimes what they'll do is when they're selling the property, okay, they will basically have a property management company working exclusively with them on site. Don't forget, guys, when you go to these Caribbean countries, let's say you rent a hotel in a resort, they built the condos the same exact way, right? They built the condos like they built a resort. So within the condo complex, whether it's 200, 300 units, you have, restaurants nearby, grocery nearby. Some of them have doctors and pharmacies on it. So it makes sense for the developers to have an agreement with an exclusive property management company on site because 90% of these condos are going to be rented on Airbnb.
Yeah.
So you need to have a company on site. So the developer sells that product. Of course, it comes at a premium, but they'll sell that product. So that, if you have a guest checking out Monday at 11 p.m. and another one checking in Monday at 4 p.m., your property management company and the cleaners are on site to turn that unit over.
Yeah, it's really, they offer a turnkey solution. They understand that most of the people purchasing are not locals.
No, definitely.
They know they're international.
Definitely.
And they know these people want to make money also on this investment because it is going to cost you, right? In the end, if you're just staying there and just not generating any profit. So they already know this in advance. And whether you're investing, like we said, in Mexico, Dominican Republic, you're going to get that same type of service.
Yeah.
Right? So Giancarlo, in these countries that you've looked at, where's maybe your favorite, your go-to spot?
We already know. Yeah, I've mentioned that in previous episodes. Dominican Republic is definitely my favorite. Some people like Mexico, and I like Mexico too, but Dominican is definitely my favorite.
Watch Luis is here, eh? So
yeah, I got to
go to
Luis is from Mexico, so nothing against Mexico.
Yeah, exactly.
But Dominican happens to be my second home.
That's awesome. So even in the buying process, because I think a lot of people, they have a really tough time wrapping their heads around this. How do I buy a property for them all the way across the globe? Like, do they actually have to go there and visit?
You can. Guys, these developers in these countries have designed their system to be absolutely seamless when it comes to purchasing properties from abroad, right? Like they have on-site sales teams and they have sales reps that could take your Zoom meetings, for example. And a lot of these companies and developers have programs that they like to call fly and buy. What does that mean? Well, if you purchased a property through a developer on plan and you say, hey, I'm coming down for 2 weeks on these dates, they'll actually arrange for a shuttle service to pick you up from the airport to transport you to your property if it's already constructed. If it's not, they'll arrange a chauffeur to come get you to bring you to the sales office where you could speak to their sales team on site and do a walkthrough of the project grounds of the actual project itself, right? So you could definitely purchase and visit the property when you go down. Some investors, again, it depends what type of investor you are, guys. Some people, like I know investors that have purchased and sold properties without ever actually visiting here locally. Yeah. For example, Anthony sold me 2 of my investment buildings and never even visited the properties.
Sure could.
Yeah, he did, to be honest with you.
So, well, I found the opportunities. They were good. The numbers made sense. There was no need to go visit them.
No.
When it's true though, right?
Yeah.
And you're doing well with them as well. So let's not kid ourselves. Now, how can we be protected from a lot of these, scams that we see out there? What are some of the things that we could do to help buyers safely buy abroad?
So guys, a few things you need to do here. Number one, if you're purchasing without a real estate broker representing you, which I would always recommend to be represented by a real estate professional, do your due diligence, right? Because doing your due diligence on the, for example, developer, how long they've been around, are they an independent developer, a commercial developer? Because that makes a huge difference in these countries. Independent developers versus commercial. Independent, unfortunately, in some of these countries, scams are more likely than not. And independent developers are less regulated than the commercial developers. So do your due diligence on the developer. Find out how long they've been in business. Find out how many projects they've done. Find out if they've ever went bankrupt, if they've ever had any lawsuits. Or if you want to streamline all that, get yourself an international real estate broker that's done all this due diligence already. For example, I work with a ton of developers that I know are qualified and reputable, and we know their products. So when someone comes to me and says, hey, I want to buy a product in the Dominican Republic, I know to send them to these 3 projects because they're designed by these 3 developers who have been in business for the last 10, 15 years, have done dozens of projects, right?
I think that's the key takeaway here. Use a real estate broker. Just like here in Canada, just like in the US, if you are purchasing a property, you're not paying anything to be represented. You get all the benefits though, especially internationally, where you don't want to be taking a chance, just dumping your money in a property or in a contractor that you have no idea who it is.
Exactly.
Right? So now, I know a lot of people must be thinking, because this is what I think about. When it comes to political instability, I'm sure that's a huge factor when deciding where to invest. Now, is this something you go through with your clients? Is it maybe a buying opportunity? I don't know. What would you think about this?
I think it's a huge factor, yes. I think the political aspect really comes to it in North America more than it does in the Caribbean countries. So, for example, right now, the Florida condo market, unfortunately, is not doing great.
No.
Right? So I know a few owners who own condos in Florida that are trying to sell their condos and have had it on the market for a year, almost 2 years, without being able to sell it. Right? And some of these guys even call me because they're trying to sell their property and move to the Dominican. Right? So, I mean, in countries like Dominican and Mexico, you don't really see much politically influenced components to investing just because they're growing economies, right?
Mm-hmm.
But to answer that question, I've had people call me trying to offload their properties in Florida to buy a vacation condo in the Dominican Republic, only because the Florida condo market right now is not doing too well.
Which is so strange to me. Well, I know maybe we're going to go a bit off topic here, but you're right. Florida, the market right now is not good in Florida, right? The rental space is not great. We have a lot of people saying, unfortunately, we're not going to come back to Florida.
Yeah, not the condo market, at least. Like, I know people who are buying single family homes in Florida, they're making money, but not the condo market.
And it just leads me to think, I get it that the political situation maybe is a little bit unstable at the moment, but to say it's not going to be unstable in 5 years, 10 years in comparison to a lot of these other destinations is strange to me. But yeah, you're right. I see this happening, very often,
Yeah.
So even when investing in these properties, do you look for, we'll say, more of an appreciation of an asset, or are you looking for cash flow, rental property? What's really the priority?
I like cash flow.
Yeah.
Right? I know that every month, I like knowing that every month my investment is putting, after all expenses, $500, $1,000 in my pocket.
Mm-hmm.
Right? But I also like appreciation. And, we coach some of our students too about this, right? There's many types of investing. Are you investing for cash flow? Are you investing for appreciation? For example, some of the clients that we're coaching will tell them, okay, but if you want to invest for rental in this market, you'll probably make, $300 a month cash flow, and you'll earn 8% appreciation at the end of the year, versus investing in this market where you'll make $600 a month cash flow, but you're earning 3% appreciation, right? So it's very seldomly do you see both of them, right? It's one or the other. But again, it goes back to what I talk about a lot. It's not what you buy. It's about the strategy you apply.
Yep. Yeah, look, I think, I'm going to stand quite firm about this, but cash flow is really it's like a kid's game in my opinion. But the real money is made on appreciation. And if we're being really transparent here on the international market, and we're not talking about Canada, US, we're talking about, we'll say, Dominican Republic and the Caribbean and whatnot, Central South America, you're going to get cash flow in these markets. You're not going to get that big appreciation that you would expect from, your local market. But still, it's a great way to diversify your portfolio, especially if you're someone that has investments. So, I know someone who has few condos in Aruba.
Yeah.
It does really well, right? They go there, the whole family goes there to vacation. They rent it when they're not there. Easy life. They have properties here as well. Why not?
Exactly.
In the end, it's just like anything else. It's a tool to diversify yourself. If you're in the stock market, you're investing in the tech sector, you're investing in the financial sector as well. It's completely normal.
Well, even guys who invest in stocks, right? They don't buy all the same stocks. They diversify their stock portfolio.
Absolutely.
Right? So like real estate's the same way. However, the double edge to that sword is because there's so many investment strategies, long-term buy and holds, fix and flips, Airbnbs. If you're spread too thin, it's hard to manage all that, right? It's not like buying stocks. If I buy shares in Tim Hortons and Starbucks and then, Tesla,
it's not hands-on.
It's not hands-on.
I'm not running the company.
Right. But now if I own if I got 3 projects going on and one of them is a fix and flip where I need to fix it, flip it in less than 3 months versus the other one being a BRRRR method, long-term buy and hold versus a short-term Airbnb, like there's 3 different strategies going on simultaneously that I'm not saying it's impossible. I'm just saying it's easy to get sidetracked and it's hard to stay on top of all 3 things happening, especially if you don't have a good team.
Yeah.
Right. And a person that I've been following for a long time on social media, Marcin Dros, his saying is focus, right? What does focus stand for? Focus stands for follow one course until successful.
Exactly.
Right. So let's repeat it. Follow one course until successful. What does that mean? Stay on track. By diversifying in your investments too much, it's hard to become an expert.
Yes. The idea is pick a lane, be super in that lane before transitioning to another lane. Right? And this is what we talk about, investing internationally. Make sure you have your portfolio set here. Whatever it is, have your duplex, have your triplex, have your additional rental property before transitioning maybe abroad.
Yeah.
Right. And this is something you're doing, to be honest with you. And I think it just makes the most sense. So maybe if you could share, I don't know, a personal client story that you have of a successful international investment that would help the people listening.
Yeah. So for example, one of my clients had purchased early on in the South, and he purchased his 2 units way before the Dominican even blew up. Like this only really became a thing since the COVID, right, in the last 5 years. And he purchased these 2 units at $80,000 each, $80,000 US. And these 2 units are bringing him north of $150 a night on Airbnb.
Yeah.
Right. So each unit will bring him $30,000 of revenue a year.
Yeah.
Right. And after expenses and management and maintenance and everything, he's pocketing maybe $20,000 a year. But on a $100,000 US investment, that's a great return. Amazing. That's a great return. So he's very, very loyal to the Caribbean investing game. With that being said, because he bought early on, the economy has exploded in these cities where he bought the condos. So he's earned equity on the property. He could easily sell that condo that he bought for $80,000 for $160,000, $170,000.
Yep, which is super. That's like a real success story. Now, what's some of the mistakes, or maybe if it's one of your clients or someone that you've seen someone make investing abroad? Kind of what was the lesson from that? What could we learn from that?
Not doing your due diligence, guys. Again, it goes back to due diligence, right? So I've seen someone unfortunately lose their down payment because the developer that they were working with was not reputable, was independent, and was not part of the commercial component of development in this country. So unfortunately, that developer disappeared and took not only his down payment, but the down payment of others, right? And when something like this happens, guys, it's very hard to get your money back. It's very hard. There's no rules, regulations in these countries. They're very, for example, when I was on a construction site there, I saw a guy working in sandals and socks. And here in Canada, like sandals and socks on a construction site is a big no-no. You need steel toe boots. You need a hard hat. Whereas there's not the same,
oh my God,
there's not the same committees that, regulate the construction component. So he was able to work in sandals and socks. But going back to that,
I'm sure things get built faster though.
It depends. Depends. You know, they're working on island time sometimes, guys. They work on island time, right? And they're stress-free down there and everything. So, I mean, but if you had all that sunshine and all that, you know, salt water nearby, you'd probably be stress-free, right? So, but do your due diligence, guys. And this is why I say it's important, especially if you're investing internationally, work with an international real estate broker because they've already done their due diligence and you're protected. So, like, unfortunately, this person that I know lost $30,000 down payment. Shoot. Yeah. Shoot.
So besides, you know, doing the proper verification with, you know, the real estate agents, the property managers, do you think there's anyone else who need on your team? I don't know. I'm thinking out loud, you know, a lawyer.
You would definitely need a lawyer.
Yeah.
You would definitely need a lawyer. I would try to find a international real estate lawyer, someone who specializes in the international developments 100%. But essentially what you need is a property manager, a real estate broker, and a lawyer, as well as a mortgage specialist. In these countries, to a mortgage specialist.
Yeah. Now, when it comes to the accounting side of the business, right? Because you're earning revenue from this property.
I am.
How does that get accounted for?
So that's a very interesting question because you could actually...
Maybe don't want to say because
just before we get on this, guys, we are not accountants or tax experts, so always do your due diligence.
This is for educational purposes only.
Educational purposes only, exactly. But when it comes to accounting, okay, you do have to declare some of that back here in Canada. Okay, now all depending on how who your accountant is and the tricks that he could work, you could minimize your tax obligations when you're investing internationally. Okay, and some accountants I've heard they separate the two incomes. So whatever's investment income from the Caribbean stays in the Caribbean, and they need to declare their taxes in that part of the world where they'll pay less taxes, but the minute they take that money back to them in Canada, that's when they're obliged to pay taxes on that money. Because Canada does not have a tax treaty with Caribbean countries, right? Like Costa Rica, for example. There's no tax treaty there. So the minute that you take the money that you made in Costa Rica back to Canada, you're subject to double taxation, right? So versus keeping the money down there, right, where you pay taxes in that specific country, so and reinvesting it in that country, it's just not necessarily a bad thing.
No, not at all. If anything, you're going to grow your portfolio in these countries.
Exactly. Because let's say, for example, the tax bracket down there is 20% and your tax bracket in Canada is 50%. Well, you know, if you don't do it properly, you're going to be paying up to 70% in taxes, which is astronomical, right? Nobody gets into real estate to pay 70% in taxes. But by
gets into business, period.
Right.
So you pay $1 tax.
Exactly. But for example, if you invest in the US, because we have a tax treaty with the US, you pay your 20% in the US. And then when you bring that money back to Canada to declare it, you're only really paying the difference, which is 30%, let's say. So but this is why we always suggest, guys, speak to a team of experts and professionals for this stuff.
Yeah. So I guess the key takeaways here,
you're the professional. You're the professional. Do your due diligence, you know, and really, if you're looking to invest internationally, I encourage it. I love it a lot. You know, make sure you have a base here.
Yeah.
Because, guys, if you cannot invest locally, you cannot invest internationally.
Yes.
Right?
Absolutely.
Definitely.
Super.
Good?
Yeah.
All right. Guys, I think that's all we have for today. Yeah?
Yep.
If you have any questions, you can write us. Follow, like, comment, follow, subscribe. We're on Spotify, Apple Podcasts, YouTube, Facebook, Instagram. Yeah. And
click that like, follow, subscribe button. It really does do us good. Thank you so much, guys, for listening.
All right, guys. Take care.
Ciao, ciao.